So what did we see after the Chinese Lunar New Year holidays? The expectation was they will continue to spend.
Yeah, that didn't happen. You get a big bounce in January in spending across the board, whether it's travel and restaurants, hospitality, but all that has tapered off as you get into February. As a matter of fact, travel has slowed down quite considerably. And when you look at year-over-year results, you're still not seeing that growth accelerate compared to last year levels. So the economy, in many ways, remains under pressure, especially the Chinese consumer.
What are we seeing in the very crucial real estate sector? And could we expect more measures coming from the NPC?
Yeah, so the real estate sector has some silver linings, I would say. I think there is now in the data some evidence that prices and sales have bottomed out. Now, the commercial side of the property market is doing much better than the residential side is. That said, again, I do want to caution, compared to year-ago levels, we are still looking at a pretty serious bloodbath, especially when it comes to housing prices.
Shehzad, the other thing that is a perennial worry when it comes to China is the regulatory outlook, right? And we are hearing reports that government agencies are set up for the next reshuffle. Is that still something that preoccupies the worries of investors looking at China?
Yeah, I think that remains a big concern. Now, what I think we've seen happen in the property market is that a lot of there's been a government decision, so to speak, that the problematic actors and developers have perhaps been taken care of, that enough of the sector, the bubble has been deflated, that perhaps now you can move in and begin the process of resuscitating the firms and begin the process of putting a floor so we don't see further deterioration. And to that effect, you're starting to see some amounts of supportive policy as well.
We're also starting to see that sharper rebound when it comes to credit and borrowing uptake, right? But is that, what does it tell you when we're seeing that coming more from the corporate side rather than consumer?
Yeah, I think that tells us that businesses are certainly getting ready to perhaps start investing and start hiring again, something that they have not been willing to do for months and months, especially through most of last year. The consumers, on the other hand, certainly not going out there and getting the type of loan access it appears. That said, now we have to see how the overall economy shapes up, and if this stays on. The lenders, the bankers, most certainly seem amenable to giving out loans more than they have been.
What has all of this meant for the inflation picture in China? Because remember, when China started to reopen, the world was worried that we would see another huge inflationary wave coming from the second largest economy in the world.
Yeah, I think the latest inflation numbers that China Beige Book has picked up do offer a sigh of relief to Chinese policymakers, and I think even the Fed. We're starting to see that the initial jump in inflation kind of pare back and retreat a little bit. I think that's a positive sign for global reflation and China exporting inflation fears.
What should we be on the watch for in China in the next couple of months?
I think number one is, looking at the comeback, the Chinese consumer comeback, which I think it is still too early to count them out given just the February numbers alone. So when do we see that return? And then what is the strength and duration of that Chinese consumer, comeback that we're all waiting for? The number two, I think, item would be the property market. Do we get a sustainable recovery this year, or does it remain a mixed picture that investors will most certainly not be happy with?